Hey everyone, this is the video review for November 23rd. This is Monday. Um, Today was not the greatest day. The first trade I took, I didn't um, I didn't realize was a bad trade till after the fact. After doing my written review, I noticed that uh, the trade had a very poor risk reward, which is part of the plan being that I plan on peeling one contract as it reaches the high or the low, and then peeling one more after the break. Um, it wasn't the greatest day. Made 3 trades today. I actually can't close myself off on the last trade, thinking it was a bad trade, um, when in fact it was a good trade. The first trade was the bad trade. Um, I also noticed at the end of the day, which is what really made this a bad day, um, near the end or after I finished the trading session, I noticed that my mind was drifting to wanting to trade like a different market or wanting to incorporate the tape. Um, and I realized when my mind drifts to these thoughts of trying to add something new or doing something different, it's all due to the fact that I'm trying to look for that like an answer to find success rather than staying disciplined. I'm trying to, grasp for, as soon as something isn't working, grasp for something that I would think, like, oh, if I just had this one thing, then I'd be successful. And that's what I realized I was grasping at once when I finished the training session. Um, that's really what made it a bad day. Me thinking that way and having that mindset. I did quickly kind of stop myself from thinking about that. Not too long after I started to get in that kind of thinking space. But regarding the trading day, I was able to notice the PMI move. This is the first time I noticed a market movement like this, or a market movement occurring from a news event, um, in the way that it did. I'm pretty sure it jumped like 2 points. We can actually watch it. It was at 6:45. See this price action here. This is the first time I'm experiencing something like this. Pops all the way up to, I think, 85s. Yeah, 84s. Yeah, 85s, 86s. Yeah, that's the first time I've ever really experienced any kind of market action like that. It's like a quick price move. I've never experienced anything like that, so it's just interesting. Wanted to make note of it. But today, this video review is going to be short. I'm running late on the video review, and it's 12:03 currently a.m. and I need to get up in about 6 hours, so I'm not going to go too in depth as I normally do. Definitely tomorrow I want to start earlier and go more in depth in my video reviews, because they are very helpful to me, and they do let me see my trades actually differently than how I had my written review after speaking about it. Plus, I'd like to stay committed to the plan of having a written write-up and then a video review. I just wanted to make a note today after thinking about today. I've been giving a lot more thought towards kind of longer term kind of trading. Whether that's I don't know if my style is going to fit intraday or multi-day. But I was thinking like how I'd want to trade and how I'd want to do trades and such and such, and I feel like researching and just doing analysis or doing pre-market research or nighttime research and look at technical analysis or volume profile analysis or market news or overall sentiment or just things like that. I don't know exactly what I'd be researching, but I definitely want to have my kind of trading revolve around researching potential trades and creating trade plans and then writing them in a sort of like thesis paper kind of format and keeping a notebook, virtual notebook full of thesis paper trades is what I would call them. That's something I kind of find interesting, and that's definitely something I want to incorporate. And with how I'm currently trading, there's not much. It's pretty. I mean, it's pretty. I don't know how to pronounce the word. The periodicity or period. I think it's called periodicity, but the time frame I'm trading in is very, very short term. I'm talking ticks, and I'm not really looking, I'm not talking about putting on a position and then adding to the position or scaling out of the position or having a clear target or a structure that I'm stocking. That's something I think I definitely enjoy when I'm trading, is researching, leading to a trade plan, leading to execution, leading to evaluation, and then kind of rinse and repeat. Again, I don't know what I'll be researching exactly right now. This is just kind of thoughts in my head. And I don't know if this is going to be an intraday kind of thing or a multi-day thing. But like I said, just thoughts I wanted to get out there. And then I've been thinking about the overarching thing is I want to include research into my trading, and as I find myself to love to research things, whether I'm about to purchase it, whether I'm trying to learn something, I tend to research as much as I can to learn every little thing so I can get a good understanding of what it is, how it works, especially how it works, the whys, the whats, the hows, the wheres, that kind of thing. And I do enjoy researching things and really delving deep into getting the information and learning. So that's something I definitely want to incorporate my trading. And again, I don't know if that will be volume profile analysis, even you could say market profile. I don't know if that will be price, or technical analysis. I don't know if that's going to be, I don't know what that's going to be, what I'll be researching. But I definitely want to, the ideal, I guess, trading day would be something of, before the market opens an hour or so, looking over overnight's price action and developing the trade thesis paper, creating that plan for the trade of the day, what I plan, how I planned the if-then scenarios for the day, in the trade plan, doing that an hour before the pre-market. Every day there's something about, researching overnight's price action, overnight's volume profile, overnight's, I don't know. Again, I don't know exactly what it is, but something about researching it, creating a plan, and then following the if-then statements that I've set out. And if any of those ifs, pan out, or any of those thens, show up, executing them, and then managing the trade over the day. or possibly in the future multi-day kind of strategies. But this is all food for thought. Back to the actual day review. So this is trade one. Actually, no, this isn't trade one. Sorry. So trade one is something. It's. I'll scrub through it real quick, just so you guys can get kind of a context. But it's pretty clear on what's happening. You have a kind of a price battle occurring at the 75.25 bid, 75.50 offer. This is what I've been calling in my notes. I believe it's the price battle point. It's that it's that pair where there's a clear interest from both sides, and this is also what I call a layer 2, and depending on where we are from the low or the high is determining whether the price pair above it is the layer 1 or it's the layer 3. In this specific trade, this is the price pair above it is the layer 3 and the ones below it layer 1. But the idea here is to pretty much in the layer 1 is to not see in this example is to not see the sellers show interest at the 75 even bid. If sellers aren't showing interest and buyers are able to push the 75.25 when it's offered back to bid, that confirms layer 1. The whole goal here is to see buyers win out in layer 3, that kind of 75.50, 75.75 price pair, and that's how all these trades kind of went today. So you can see a lot of trading into the bid when 75.50's bid, and it holds a little, and it then breaks down, but it takes a lot of volume from sellers to break it. And then we see that 110 trading into the 75.75. That confirms layer 3. I get long 76 as the 110s take out all the liquidity. Stop is always at that invalidation point, when price below the layer 1. This trade started to slow down. We see sellers not interested at the 75.50 price point as they once were, and then sellers start coming in. Buyers are still interested at this new higher offer. Once when I kind of see this lackluster at 76 offer buying, I start to get a little antsy, but then it starts coming in, and I see this quick move up. I peel one, I get out, and then I start to see the slowing of the buying and the shift of interest from buyers to sellers, and then I flatten the position. Right, so that's trade 1. The strength in this trade really was getting in quickly, even though I got in a tick higher than I would have liked. But that's got to be like the strength of the trade. But the mistake of this trade is because I didn't follow my plan. This is an unplanned trade because the range of this is so small and so short. That it would make sense why a breakout would be imminent, because ES hasn't really been trading in such a tight range recently, but it also would make sense why it might trade in a tight range from a first-time experiencer of a Thanksgiving week. So I don't exactly know how this week's kind of liquidity and volatility plays out, and the range. I don't know how far. I don't know the volatility during Thanksgiving week historically. So this is new to me. So after seeing this, I thought, maybe participation is gone. Everyone's on break. But after the PMI numbers came out, all the participants started coming back in. But yeah, this trade wasn't according to plan because it's not where I got in at the 6 even was. It had I peeled at the very top, for example, or even at one, that's a 1 tick profit for a 5 tick stop. It should be 1-to-1. I should be looking at 5 ticks for the first peel and 5 ticks for the stop. But here, I'm buying right at the top, so that's not a planned trade. Planned trade would be to buy near the top, but still have plenty of room on the upside to get that 1-to-1 on the first peel. So this trade I thought was a good trade, but it actually wasn't, and that came out in the written review as well. Second trade, all these trades have the same kind of price action. It's the same kind of thing where we see a battle occurring, and then we see a change of interest, a directional change of interest happening as well. So I mean, you can see here price battle occurring. That's our layer 2. Since we're near the up, the bottom price pair is the layer 1. We see a lack interest at the 84.75 bid, and what we're looking for is buyers to show strength and win. So as soon as we see them start trading into the offer that wasn't so exciting before, and now they're willing to break the offer quite easily, which they didn't show as much conviction as sellers. That's when I get long at the 85.50, and then immediately after getting long, you can see here the lackluster buying at the 85.75 offer. Alright, again, see lackluster, it's not that strong. Offer starts to hold, sellers come in. Sellers are then sellers sell into here. Once when I see sellers go from no interest to interest, I get short. I mean, trades not the same as the past trade, but the same idea where there's that price battle point, price battle pair, however you want to call it, layer 2, and then there's a clear layer 1 at the bottom with a lack of interest from the sell side in this trade, and then at the top layer, the layer 3, this is a lack of buying interest, and then that change, and then once when you see that change of interest from buyers into liking that higher offer, that's when we get long, because we now see a short-term change of interest at these prices, and if we can keep that motivation continuing, potential break higher and pushing higher. So that's what I'm trading. Short-term interest changes. Short-term market participants' interest changes at prices and momentum of those interests continuing at even higher prices or even lower prices. That's what I'm trading. So this trade, the strength in the trade, again, I was getting in quickly, but the weakness in this trade, actually no, sorry, the strength in this trade, I read that wrong. The strength in this trade was me reading the price action after getting into the trade. After seeing the lack of momentum at the 85.75, the offer higher, if they're not willing to keep paying higher, then the move's not going to have that much strength. So after seeing the price battle here occur where the offer starts to hold a little more, sellers come in, and then we see from no interest to interest from sellers, that's when I get short. Shortly after, I just get short. So being able to read that price action and being able to read that short-term change of interest is a skill that I am trying to develop every day, and that's pretty much what my trading's based upon. As I said, the short-term change of interest and momentum on that, momentum of that interest continuing even at higher prices. That's pretty much what the trades are. The mistakes in this trade was, it was a good plan, but the indices were not even following suit to pushing higher or even showing signs of trading near the highs. You can see NQ throughout the whole kind of trade started at the highs and then pushed lower with the ES, and then just kind of stayed range bound throughout the whole trade. Right, didn't really push higher than the 98s and kept bouncing up the 95s, and that was pretty much the whole trade. And so with the Dow, the E-mini Dow, you have the 505s, trades lower to the 497s, trade kind of hits down to the 490s, trade goes on, and we're pretty much between the 50s and the 490s at that point during the trade. So it's still not pushing higher. Had I looked for the other indices making the same move, um, then this would have been a more of a complete market move rather than just one market signal. And trading those complete market moves is really what I should be focusing on, as it to me it just makes sense that if all three markets, or even the ES and the E-mini down, which I find follows the ES more closely, are all trading near their highs, and you can see that kind of willingness to, as ES breaks its high, or as ES trades near its high, the E-mini Dow follows suit, or the E-mini Dow is already trading near its highs, and the ES all of a sudden comes to its highs. Seeing the other indices move with it, in my head would make sense that this move has a little bit more juice to it and more momentum, because it's got two markets. There's two markets also showing signs of a breakout, or showing interest at higher prices and willingness to buy at higher prices, and those moves I found have a more bigger break, a bigger run, and just a more, you could, I mean, I don't know statistically, but it just seems like intuitively it would make sense why the probability of those more complete market move trades where would have a higher probability. Again, and this is intuitively and theoretically, I don't know statistically, but it would just make sense if more than one market is also pushing higher and making new highs. It's not just one market, it's the whole market. The market as a whole is doing something, is trending as a whole. So I would think, again, intuitively, the move would be greater, momentum would be higher. This trade was part of my plan. I had the three criteria needed. Tomorrow, though, I'm going to try something with a little different. I am going to only take trades that are in that complete kind of market move category, where I'll wait till I see the E-mini Dow. I will start by seeing the E-mini S&P trade near its highs, and then from there I'll look at the E-mini Dow and the Nasdaq, E-mini Nasdaq, the Nasdaq 100 futures, and then from there, if they're also having in that same kind of near their highs, or they're pushing closer to their highs, I will start to look for the layer 1, 2, and 3 form, the premise forming. This is all kind of quick. Just glancing over quickly to see it, and then coming back to view that price battle pair, to find that layer 2 and layer 1, and then putting on the trade if the other indices are still at or near, in this example, the highs, and then having more conviction while in the trade if the indices and the momentum in the ES, if the E-mini ES, in the E-mini S&P momentum after I put on the trade picks up steam, and you can also see that in the other indices, I'll have more conviction in the trade, and I might hold the second peel for longer. But again, if the E-mini Dow, but not the NQ, is showing some potential breakout, take the trade and exit when ES price action shows a change of interest in new prices. That's one of the if statements I have. Another one's if the E-mini Dow and the Nasdaq futures are showing the same potential breakout, take the trade and exit when that YM and NQ are no longer making new lows, as well as the ES's price action. This is again, what I mean by lows is just new breakouts of whether it's the high or the low. But if neither the mini Dow or the Nasdaq futures are showing the same kind of potential breakout, then don't take the trade, even if I see it clear. Premise being forward, don't take the trade if the other indices aren't showing the same potential breakout, because I want the market moving with me. I want the whole, I want the other indices moving with me, and I don't want to have just the one market. If the E-mini S&P is the only one pushing near the highs, and the other indices aren't pushing near their highs, or not trading near their highs, or not showing the same kind of strength. Those are the trades I don't want to take. Intuitively, it would make sense that if the whole market's moving with it, there's more juice to it, more momentum possible. So that's trade number 2. Trade number 3 actually is exactly, I thought it was a duplicate trade, but it literally is exactly at the same price, pairs and points, which is pretty embarrassing, to be honest, because of me not noticing this occur. But the trade number 2, 648, and then trade number 3, 654. But it's pretty embarrassing me not noticing that I had just viewed this same premise occur at the same price point, 6 minutes ago, or whatever it was. And I went long the same way, and the Nasdaq and the Dow were doing the same thing as before, and yet I still took the trade. And then I made an error having my accidentally entering on one contract too, and placing my stop before I even entered, I guess missing my keybind. But this is literally just the same trade. You have layer 1 formed here at the 84.50, the 84.75 bid and the 85 even offer. Then the price battle occur at the 85 even bid and the 85.25 offer, and then the change of interest from a lack of interest from buyers at the 85.50 higher offer, to them finding that price intriguing, and I get long. Same entry, same stop as the last trade, and I should have noticed that. I'm literally entering the same exact trade with the same exact stop, with the same exact price action and premise. But I didn't notice it. And again, I should have. The strength in this trade really was me being able to read the price action again before I got stopped out. You can see the trade management here. See lackluster selling at the 85 even bid. See some buying kind of step up, but then the lack of buying again at the 85.75 ticks up. I start to show it. Not much here again. Not much momentum, and sellers are still interested at these prices. And they start selling, then they start selling at the 85 even, and that's where I got short. Right where they used to not like those prices just a couple seconds ago. So, being able to again read that short-term change of interest while I'm in the trade from an unbiased kind of standpoint, an objective standpoint, is a skill I want to keep developing, and it saved me a couple ticks in this trade, definitely. So it's something I would say is definitely my strength of this trade. And the mistakes of this trade, again, was me not realizing I took the exact same trade 6 minutes before. Also not looking at the whole market where the indices are compared to the ES, or compared to their highs in this particular trade. And also, the trading errors I made, putting the stop before I put the entry, not hitting the entry, not hitting my keybind to enter the market, forgetting my clip size is only one contract, and not resetting it from the last trade. And these are all trading errors that I should have flattened immediately. If I guess I forgot the rule that if I do make a trading error, or my clip size is off, or my stop size is off, or something's I don't do something right. If I still enter the trade, I flatten it. Flatten it out of the trade. If I make a mistake and somehow I didn't get in the trade, I don't chase it. I completely stop, and I don't trade that trade no more. I look for the next trade. I'm not trading errors. I want good, clean setups, and I don't want an error to dictate how I have to manage it or how I have to trade it. So, but tomorrow, I gotta pay more attention to where my trades are and what my trades are doing, especially at the price point, because I could have seen this one coming. It's the exact same price action 6 minutes later. So, also double checking that after every trade, I reset my trader settings to go back to standard default. So in the next trade, I know I can be confident that I'm putting on my full clip per my plan, of course, but I'm putting on the 2 contracts and not just the one. But that's gonna do it for now. Short kind of video review. Just wanted to quickly go over the trades. Again, one common thing of all these trades is it pretty much looks all the same price action wise, with the layer 1s, 2s, and 3s forming its premise, the price battle occurring at a layer 2 at a price pair. The only difference is where other than the 2 last trades, the only difference is where it occurred, because the last 2 trades, pretty much the same goddamn thing. I just thought that was interesting. I thought, having a consistent, clear premise in each trade, and having that same consistency in each trade on how I defined when to enter, is a huge improvement from last week's performance, where some entries didn't look right, some weren't even good entries, some were chases, where now today every trade looks the same. It's the same setup, it's the same price action, the same layer 1 price action, the same layer 2, and the same layer 3. It's the only difference is where it is in the market and at what time. So that's something I definitely am proud of, being able to consistently stick to that plan. Just being able to have that consistency in each and every trade today, where the premise is being formed with the exact same price action idea and directional change of interest idea in every single trade. So that consistency is what I've been trying to work on, and that discipline to stick to the plan. And here I have, other than the bad risk reward in the morning in the first trade, which made it obviously not part of my plan, but the what I'm looking for in the premise, in the layers, is identical to all the trades today, and that is something I'm proud of, definitely. So I'm gonna call it here. Hope you guys had a good day. I will see you all tomorrow.